welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for the segment, we have Sara, ESG index strategist with Nasdaq Global Indexes, to discuss how the Nasdaq-100's strong start to the year is impacting the technical on the index. Sara, it's great to see you as always, and this certainly has been a remarkable start for the Nasdaq-100.
Hey, Jill, yeah, we had a fantastic kickoff to 2023. We actually saw the index gain a little over 10%, making it one of the best months. January's on record since 2001. Now that we've had even a few days more, of February, the index through yesterday's close is up over 17%. So outperforming the S&P 500 right now by 8%, and nearly 20% off of those December lows. So moving back into what we would call, a bull market. But again, January was the best on record since 2001. And I wanted to take a look at what names were really driving this performance here recently, because, we've seen all these names in the news. We saw Meta yesterday have its single best return in over a decade, up about 23%. So when we look at the actual attribution, it's Amazon that has actually added the most to that 17% so far, adding a little over 2%, followed by Apple, Nvidia, Tesla, and Meta there in the fifth position, adding 1.39. So we are seeing tech really add the most here in terms of performance, which is not surprising, giving the kind of the Fed news in terms of the potential slowdown in raising rates. We've seen discretionary and telecom also contribute here. But like you said, we wanted to take a look at how this translated actually into the technical picture.
So what does the technical picture look like? Is there any confirmation here? Is this sustainable?
Yeah, so I think the first thing to point out here is that the point and figure chart of the Nasdaq-100 index was able to move back into a positive trend on January 23rd. That was the first kind of sign that we were looking for off of the bottom, the ability to move back up into that positive trend. So we've done that. Now we've seen the chart give 3 consecutive buy signals. This tells us that demand is in control. This tells us that prices are generally moving higher. Yes, we have seen some pullbacks, but not enough to ever break support or move off of these buy signals. So right now we're at levels dating back to August of 2022. So, we do have some resistance to move through here around the 13,700 mark. That would be that August 22 high water mark on the chart. But that's the next level of resistance that we're looking to clear. So we do have various levels of support now that have been established due to these consecutive buy signals. So we have support at around 11,600, 11,300, and 11,100. So if we were to see any sort of pullback, then we can look to those levels for potentially levels of support. If we saw those start to break again, we would start to be concerned. But I think that here off of those October and December lows, this is a nice picture to see again as we start this year. It's been quite some time since we've seen consecutive buy signals like this on this particular chart. And we do remain down about 15% on a rolling 1-year basis and about 22% off of those all-time highs that we saw in November of 2021. But again, these are those first kind of signs that we're looking for, and we'll continue to monitor those support and resistance levels going forward.
All right, Sara, great work as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.